Hockey here from the Pure Alpha Trading Group. Today is Saturday, September 13th, and I wanted to do a weekend update for the stream. First, we'll look at where we've been, and at the end, we'll look to the week ahead. For those of you who don't follow me on the stream, I'm a big picture trader. I'll day trade the in-play names, but the main chunk of my portfolio is comprised of more long-term positions, which I give room to work. So in my weekend analysis, I'm usually not looking for actionable ideas for the week ahead. I'm more refreshing my mindset for the week ahead. Sometimes what happens when you're in the heat of battle during the week, you develop tunnel vision. It happens to me and it happens to all traders. And the more you get into that mode, the more twitchy your trading becomes and the less profitable it usually becomes. I find that traders on losing streaks fall into this topsy-turvy tumble of looking at smaller and smaller pictures, narrowing their time frame and narrowing their price significant levels, to the point where once they'd be looking at dime moves, they narrow it to 5 cents, and eventually every tick the wrong direction hurts them. It's good on the weekends then to reset, to look at the big picture, figure out what really matters, and so that's what I do on the weekends, and I'll share a summary of what I've found. Alright, starting with the S&P 500, there has been a bit of negative sentiment over the last week or two. I really don't understand why, because when you pull back and look at the big picture, we remain in this extremely bullish channel. There are consistently higher lows and a streak of consistently higher highs. Until that breaks, we are still in a bull market. There is some underlying weakness in individual names, but provided we're still in a bull market, I'm perfectly content to buy on the weakness. Moving on to the Qs, they are sitting in a nice consolidation after the most recent run-up. They haven't actually seen the same weakness that the S&Ps have seen the last 2 weeks. While the S&P has come down slightly from the highs, the Qs remain coiled right below 100. While we may pull back to maybe this 98 level and fear may come into the market, I'd actually be looking to buy that fear as a false breakdown when everybody's busy selling doom and gloom that 100 resistance held and calling for a bear market. Because what will likely happen in that scenario is we'll just reverse right back up and over 100 and hit 105 before Christmas, and all those doom and gloomers will once again miss the move. The Russell, however, is slightly disconcerting. It hasn't really been able to make higher highs at all this year. While the high in July was technically higher than in March, I can't really count it because it reversed and closed below 120 intraday and acted as an intermediate trend reversal over the monthly terms. Most recently, we couldn't even make it over 118 before this weakness last 2 weeks, so definitely keep an eye on the Russell. I know people have been talking about it all year, but at some point this is going to break over 120 and confirm the epic bull run continuation, or it's going to break below 108 down here and signal caution. But at that point, I think we'll see weakness and levels broken in other markets, so I'm not putting the same amount of weight to the Russell as some of the other traders on the stream that you may read about. I actually like to look at the S&P and the Qs because I think if you end up looking at the Russell, you're going to start getting shaken out in and out of trades constantly. And when we move on to the transports, we can see that the transports have been making higher highs and higher lows and sit right near the all-time highs. So they are confirming this bullish view that I'm seeing in equities. Bonds seem to have reversed last week, but they're right back on support here. We'll definitely be watching to see how these react to the FOMC minutes this week. That will likely be a catalyst to push these up off of supports or very clearly break below the support level. And this leads me to gold. I have actually been bullish on gold since the beginning of the year due to the hate last year. And while that worked for me initially and I was up quite a bit, I'm basically right back down to where I started, and you can see why. We have a descending triangle consolidation after the long move down, lower highs here, and strong support around 116. But strong support can't always act as support. Eventually, after tapping on the support, it's going to break, and gold looks like it's setting up to break down, and it will likely happen quickly. Again, the FOMC minutes this week could push gold through that support level and lower. My target for a move below 116 would be 100, and I'd expect it to happen pretty quickly. We've got a busy week ahead. of data. As I've already mentioned, the FOMC minutes are Wednesday. You've also got industrial production Monday, consumer price index Wednesday, housing and jobless claims on Thursday. So there's quite a bit of market moving news this week, and it wouldn't surprise me to see all of those markets, or these ones that I've just gone over, move pretty dramatically using the data as catalysts. Equities consolidating near highs, bonds as support, gold looks ready to break below 100. It should be fun. This is Hockey from the Pure Alpha Trading Group at HockeyHika on Twitter and StockTwits. Enjoy the weekend.